Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to dive into today's market action with you. It's been a wild day on Wall Street with some major twists and turns, from tech sector turbulence to standout performances in individual stocks. So, grab a coffee and let's break down what matters most for us long-term investors, while also peeking at the short-term waves that could shape our strategies. First up, let's talk about the major indexes. It's a mixed bag today. The Dow Jones managed to climb a solid 0.5%, showing resilience in traditional sectors. But the Nasdaq took a hit, dropping over 1.5%, largely due to pressure in tech-heavy names. The S&P 500 also slipped about 0.5%, reflecting broader market uncertainty. And keep an eye on the VIX. Volatility is ticking up, signaling some jittery nerves out there. For us long-term players, this kind of choppiness isn't a panic button, but a reminder to stay focused on quality and value. Now, zooming out to the bigger picture, the market is grappling with some heavy themes. One of the biggest stories is the brutal sell-off in software stocks, triggered by fears of AI disruption. A new tool from Anthropic has investors worried about the future of traditional software-as-a-service models, and hedge funds are doubling down on short bets, racking up billions. Meanwhile, there's buzz around home builders pitching affordable housing policies to the Trump administration, giving their stocks a nice lift today. And on the global front, international markets are catching attention. European stocks are showing bullish momentum despite tariff threats, and some are asking if 2026 could mirror the volatility of 2022 with elevated valuations and macro risks. As long-term investors, these global shifts are worth watching, but let's not get swayed by every headline. Let's shift gears to the day's big winners. Among large caps, Eli Lilly stole the show with a massive double-digit jump, fueled by blockbuster sales of its weight loss and diabetes drugs. Amgen also had a strong day alongside GSK, both riding positive momentum in healthcare. These moves highlight the defensive strength in healthcare, a sector we long-term folks often lean on during uncertain times. Even in the short term, these names could have more room to run if their pipelines keep delivering. On the flip side, the losers list is packed with tech and semiconductor names. Advanced Micro Devices took a brutal hit, down over 17%, despite beating earnings, as investors seem spooked by broader AI concerns. Micron Technology and Palantir also saw significant drops, reflecting the tech sector's rough patch. For us long-term investors, these dips might scream opportunity, but caution is key. Let's wait for the dust to settle on this AI-driven volatility before jumping in. Looking at the market movers, Nvidia remains a focal point despite a slight pullback today, still a heavyweight in trading volume. Apple, on the other hand, saw a nice uptick, offering some stability in the tech space. Tesla, though, continues to face pressure with a near 4% drop tied to ongoing delivery and growth concerns. These movers remind us that even giants can wobble, but their long-term stories, especially around innovation, are what we should anchor to. Diving into the most active stocks by volume, Nvidia again tops the list, showing how much attention it's grabbing even on a down day. Intel and Uber also saw heavy trading, that's reflecting investor interest despite mixed price action. High volume often signals sentiment shifts, and for us long-termers, it's a cue to dig deeper into fundamentals rather than chase the noise. Now let's chat earnings, as it's a busy week with plenty of big names reporting. Today, we've got companies like Uber, Disney, and Qualcomm in the spotlight, with Uber showing impressive revenue growth driven by food delivery. Novo Nordisk took a hit despite strong past performance, as weaker guidance spooked the market. Looking ahead, Amazon, Meta, and Eli Lilly are on deck, with Lilly already crushing it today on strong drug sales. These reports are critical for gauging sector health, and as long-term investors, they help us refine our conviction in core holdings. Short-term, though, expect some wild swings as the market reacts to every whisper of guidance.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Peeking at the top performers over the past week among large caps, some names really stand out. Verizon surged with a near 17% gain, showing strength in telecom, while FedEx and Walmart also posted impressive weekly climbs. These gains underscore pockets of resilience, and for us long-term investors, they're a reminder to look beyond daily noise to broader trends. On the other end, the past week's biggest losers include PayPal, down nearly 23%, and Thomson Reuters, off over 21%. Tech names like Synopsys and Shopify also took heavy hits, reflecting the sector's ongoing struggles. These short-term drops can sting, but they also open doors for us to scoop up quality at a discount if the fundamentals hold. Wrapping up with a sector snapshot, healthcare led the pack over the past week with a standout performance, likely tied to strong earnings from names like Eli Lilly. Industrials and energy also showed gains, offering some balance against tech's woes. For long-term portfolios, this diversity in sector strength is a green light to stay balanced across industries. Conversely, technology and communication services were the week's weakest links, dragged down by AI fears and software sell-offs. Consumer defensive and financial services also lagged, though less dramatically. These short-term sector slumps don't redefine our long-term thesis, but they're a heads-up to reassess exposure in overvalued areas. As we tie it all together, today's market paints a picture of caution and opportunity. The S&P 500's slight dip reflects broader uncertainty, but for us long-term investors, it's just a blip in the bigger journey. Keep an eye on tech's volatility and AI disruption narratives. They could shape short-term trades, but shouldn't derail a disciplined strategy.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.